I find the next part of our conversation a good debate also around sort of where we are and where you guys are expressing your views in some respects on where you think we're going. Jim trimming Oracle, okay? Stephanie buying more Vertiv. Stephanie Link leaning into strength. Jim Lebenthal running from it.
Oh, God. Scott, I love you. I'm
running from it.
Okay, I've been in the stock 2.5 years.
Okay.
I'm up 150%.
Okay.
It's become a very big position. I'm trimming the stock. I'm going to sleep like a baby tonight trimming the stock. I'm still going to own shares. However, we're entering earnings season. We all know that in earnings season, something gets stupidly dislocated. I have been fully invested. I need to have some dry powder. If I want to buy low, I have to sell high. That's the name of the game.
So what's interesting about this in and of itself is that both stocks are up the identical amount from the April low, 87%.
That's funny. An unfair cherry
no, it isn't.
Funny.
It is not. They're based on the moves. I'm not cherry picking anything.
He's up 150% over a couple years.
So what? So what?
And I'm new. And
you're fully in the throes of a bull market.
Steph,
these are two. Hold on. These are two stocks that are at the epicenter in many ways of what this whole bull market and record-setting run are about.
Fine.
AI infrastructure. Oracle right in the thick of it. Vertiv, obviously, in the thick of it, leaning into strength in stocks that have worked well.
All right, so I'm new to Vertiv, right? I have been in Quanta, in Eaton, in Rockwell, in GE Vernova. I love the theme. I've been pounding a table for 2.5 years on this theme. Vertiv is the very best in the business, and it got away from me. It was always too expensive. And so this stock is down 25% from its highs. Yesterday, it was down 12% on the rumors that AWS was building a cooling system. I'm like, you gotta be kidding me. These guys, Vertiv, have an end-to-end solution and services and a huge install base. And so down 12%. I averaged down, and I'm going to continue on any weakness because I still believe very strongly in this decade-long theme. By the way, Dave Cote is a rock star. He's the executive chair. He has a great CEO as well. So I just wanted to find best in class on sale, and that's what I did. That's actually my style. I kind of feel like the three of us, really, right? We try to find quality, and then when it gets hit for whatever reason, if the valuation makes sense and the fundamentals are still strong or getting better, that's what you want to do. That's how I invest.
By the way, Vertiv's only up 9%
that's right.
year to date. You can't necessarily judge things on such a short period of performance and a big burst that you've gotten from it. Well, I just think it's a really interesting way that you guys are looking at two winners in your books over the last 3 months. One trimming, one again seeing where strength is. And riding it.
I'm not going to damn Oracle and say it's too expensive. I mean, you know what I think is a good analog here is Broadcom, Steph, and I know you've been in that for a long time. That multiple expansion in Broadcom went from the low teens to the low 30s. Frankly, that's what Oracle has done. And I do think, geez, am I maybe trimming this a little too soon?
Are you trimming Broadcom?
Got too big.
Are you trimming Broadcom?
Not yet, but I'm close. It's 7% of my. It's 7% of my portfolio. I might come on next week and say I trimmed.
It's 7% of the portortfolio.
It's 7% of the portfolio.
Is Oracle 7% of your portfolio?
6% of the portfolio. I mean, look, that's what. Oh, did you give me an eye roll? Go ahead. You gave me an eye roll. That's what happens.
A mild one.
Wait a second. I bought the stock February of 2023. First purchase at $86 a share. It's at $235 or whatever it is now. I mean, when that happens,
no, I'm not hating on anybody for taking profits in a stock that's up a lot. I just think it does sort of tell a little bit of a story of psychology of what's happened in this market over the last 3 months. Yeah. In and of itself.
I think there's great. Listen, I'm not hating on Oracle. I think there are opportunities right now. I toyed with the idea of buying some Delta today.
You sold one. You sold another name the other day that was up a lot. I don't remember what it was, but you sold it. You did.
Shoot, I can't remember, Scott.
I know you did. I just can't remember the name.
I take it as gospel. What? It's entered in the record.
Hold on. One of our producers tell me. What was it?
What did I sell?
Did you sell MP Materials?
I did. Oh, man.
No, I was thinking of something else. There was one last week. I can't remember. You sold something recently, too.
Somebody tweaked me yesterday on MP because it went to 45 and I sold it at 33. Listen, folks, and listen closely. It was a $10 stock a year ago. Nobody give me any attitude about selling stock that's up 200% in a year.
All right, so let's talk about one more name that has been a massive winner. We've talked about it at least 2 times already this week because there've been a couple of calls on it. I think there were downgrades too. Not to sell or anything like that, but neutral because the stock has run so much. It's Netflix. The price target today goes to $1,500. I don't think it's the street high, but the chase has been repetitive, let's just say. Stock exceeds expectations. Analysts ups price target. And wash, rinse, repeat. And there's their stock at $1,200. Needham says it's going to 15. Josh Brown, Netflix.
Yeah, so this name has been on my best stocks in the market list for a long time. I pulled the trigger. I'm up a lot, but I'm not selling, and I'm going to tell you why. You have a name right now just above its 50-day moving average, but in the midst of an 8% pullback from the all-time high. This is the largest drawdown that Netflix has been in since April, and it's worse than the stock's average drawdown during that entire time. The average pullback for Netflix has been about 5%. So this is a little bit of a larger pullback. Why are people selling the stock? Maybe it's because earnings are coming up and you know, people are a little bit jittery because of how much the stock has already rallied. I really don't know. I don't think it's terribly important. What I do think is important is this is the type of name where if you don't own it and they, for whatever reason, put out, here's the expectations, $11 billion in revenue, which would be 16% year-over-year growth, which is incredible. Earnings of $7.08, that would be a 45% jump year-over-year. If for whatever reason, let's say they do like 706, and the stock market, acting the way the stock market does, chooses to rip 11% out of the share price in Netflix, that's where I would be buying it if I weren't already long. So that's the way I would think about going into this report. Not necessarily chasing it into a news event like that, but just saying, like, if I get another crack at it, I want to get long. So you're at an 8% drawdown now. If you end up in a 15% drawdown from the high in this stock, I think you're a buyer, not a seller.